Welcome to Learn Commerce PU online classes. Don't forget to like our video and subscribe our YouTube channel for all the updates.
Hello students, welcome to second PUC Accountancy online classes. In my previous class, I solved a problem on creating goodwill and writing it off. Now, we are moving on to the third problem, page number 53. Page number 53, third problem. Let me read out the problem and then we will analyze in the meantime, then we will solve the problem. Pankaj, Naresh and Saurabh are partners sharing profits and losses in the ratio of 3:2:1. Naresh retired from the firm due to his illness. On that date, the balance sheet of the firm was as follows. 31st March 2018 is given. Let me take up liability side first. General reserve, you know it very well, right? In case of retirement, any reserve or accumulated profits should be transferred to the capital accounts of all partners. Should be credited to all partners' capital accounts in the year old profit sharing ratio. Then, sundry creditors, bills payable, outstanding salary, provision for legal damages, these are normal liabilities. Capital balances given of all the three partners, that is a starting point. It is by balance brought down on the credit side of, that is a partner's capital account, right? Then, let me move on to the asset side. Bank, that's bank balance, cash at a bank. Debtors, there is a provision. Stock, furniture, premises, all are assets. Let me take up the information, that is additional information, adjustment part. Premises have been appreciated by 20%, stock depreciated by 10%. So premises appreciation, premises is an asset. Increase in the value of the asset is a profit to the business, should be credited to revaluation account and should be added to the concerned asset in the new balance sheet, right? Stock depreciated by 10%, depreciation, decrease in the value of the asset. So, we have to debit it to revaluation account and should be deducted from the concerned asset in the balance sheet. Then, provision for doubtful debts was to be made at 5% on debtors. See, already there is a provision of rupees 400. They told us to maintain, that is a PDD at 5% on debtors. 6,000 is the value of debtors, gross debtors, into 5% means how much? 300 rupees, right? 300 rupees. So, if we fix the PDD at 300, that means we are reducing PDD. Already there is a provision of rupees 400. Now, in the problem it is clearly mentioned that maintain PDD at 5% on debtors. So, it will come to 300. That means we are reducing the PDD to the extent of rupees 100, which means the value of debtors will increase. Earlier it was 6,000 minus 400, 5,600. Now, it will become 6,000 minus 300, 5,700. So, 100 rupees increase in the value of debtors. So, that 100 rupees should be credited to revaluation account, is a profit to the business. And in new balance sheet, debtors inner column 6,000 minus PDD 300, that is 5%, right? Outer column 5,700. That is what we have to do here. Then, what else? Further, see, there are two implications for this sentence. Very complicated one. It is confusing one also. They gave comma after further. Actually, there should not be any comma. Further provision for legal damages is to be made for rupees 1200. This is the correct sentence. They gave comma after further. If I read out, see the difference. Further provision for legal damages is to be made for rupees 1200. What does that mean? It gives meaning like PDD. That is a provision for legal damages should be maintained at rupees 1200. Actually, that is not the meaning here. Further provision for legal damages is to be made for rupees 1200. That means already there is a provision for legal damages rupees 6000. Now we will increase the that is provision by rupees 1200. That is the meaning, by rupees 1200. This is additional provision to be created. So we will debit 1200 to revaluation account, and in the balance sheet on the liability side, provision for legal damages, inner column 6000, add additional provision 1200, 7200 in outer column. That is what we have to do. Then furniture to be brought up to rupees 45,000. That means this is the final value of furniture. Earlier there is the value of furniture in the balance sheet was shown as 41,000. Now they told increase the value of furniture to rupees 45,000. So there is an increase in the value of an asset is nothing but profit to the business, credited to revaluation account. And in the closing balance sheet, new balance sheet, furniture inner column 41,000, add 4,000, that is a increase in the value, appreciation 45,000 in outer column. So when new value is given, write it first in outer column, then write the old value in inner column, find out the difference, treat it as appreciation or depreciation. That is what you have to do here. Remember. Then goodwill of the firm is valued at rupees 42,000 and the same be written off immediately. So what we have to do is we have to create goodwill by crediting all partners capital account in their old profit sharing ratio, and then we have to write it off by debiting it to continuing partners capital account. New ratio is given in their new profit sharing ratio. New ratio is already given in the problem. It is 5:1. New profit sharing ratio of Pankaj and Saurabh is decided to be 5:1. So you have to debit goodwill. You have to write off goodwill by debiting continuing partners capital account in their new ratio of 5:1. That is what you have to do. Entry is partners capital account debtor to goodwill account written off. That is what you have to do. Whether goodwill will appear in the new balance sheet? Yes or no? No, it will not appear because goodwill account automatically gets closed when you pass writing of entry. When it is written off, no balance in goodwill account. Remember this. Then rupees 26,000 from Naresh's capital account is to be transferred to his loan account. So what we have to do is first we have to transfer 26,000 to Naresh's loan account, that is to Naresh's loan account 26,000 in his column. Then what about the balance? And balance to be paid through bank. If required, necessary loan may be obtained from bank. It's a bit complicated one. Here what we have to do is we have to make payment through bank. Bank balance is how much? Say 7,600. If it is not enough to make payment, the remaining amount, the balance amount should be paid by borrowing bank overdraft. So one more liability gets created on the liability side, bank overdraft, that is the balance amount that is to be payable to the retiring partner. That is what we have to do here. So remember, if there is a bank balance, make it zero first, make it nil, make payment from that balance, then whatever shortage is there, that should be paid through bank overdraft. You have to create bank overdraft to that extent of shortage of funds. So remember this, without making your bank balance zero, you are not allowed to create overdraft. Remember. Yes, then balance to be paid through bank. If required, necessary loan may be obtained from bank. New profit sharing ratio, I already told you. That's all. Let us move on to the solution, isn't it? We have to prepare revaluation account, capital accounts of partners, and balance sheet of the firm after ratios of retirement. Let us solve the problem. First one is revaluation account. Revaluation account. Draw the columns. Revaluation account. Revaluation account. Debit credit is a must. Write it. Then write column headings. Particulars can provide for JF and amount in rupees. Amount in rupees. Draw the columns. Amount in rupees. Yes. That's all. Let me take up debit side first. To stock account. To stock account. What it is? Decrease, right? Don't write depreciation because it is a current asset. Decrease. How much? 10%, right? 9,000 is the value of stock into 10%. It comes to 900 rupees. Write it in outer column. Then, legal damages. Provision for legal damages account. Legal damages. How much? They told you very clearly 1,200, right? Write that amount. What else? Nothing on the debit side. Move on to the credit side. By premises. By premises account. What is that? Appreciation, right? Appreciation 20%. Yes. Appreciation 20%. 80,000 into 20%. So it will be 16,000, right? 16,000. Then provision for doubtful debts decreased by PDD. Decreased. That is 400 already appearing. They told us to maintain at 5%. So it will become 300. So 100 rupees profit to the business. Provision decreased and the asset value increased is an income or profit to the business. Then by furniture account, appreciation how much? 45,000 minus 4,000, sorry, 41,000. 45,000 is current value. They gave earlier value was 41,000. So there is an increase of rupees 4,000 is a profit to the business. That's all. Credit side is greater, isn't it? So find out how much is the profit. How much is the profit? So 20,100 is the total of the credit side. Write the same total on the other side. Find out the difference. 18,000 is the difference. 18,000 is the difference. So to all partners capital account. All partners capital accounts. All partners capital accounts. Capital accounts. Under that, what are the three partners? Pankaj, Naresh and Saurabh, right? Pankaj, Naresh and Saurabh. Yes, 18,000 into 18,000 into what's the percentage? What is the ratio of the partners? That is 3 by 6, 2 by 6 and 1 by 6, right? Yes, 3 by 6, 18,000 into 2 by 6 and 18,000 into 1 by 6. So it will be 9,000, 6,000 and 3,000, right? Yes, 18,000. Yes, profit on, right here, profit on revaluation, balancing figure, Yes, that's all. Your revaluation account first step is done. Now, let us move on to the next part, that is combined capital accounts of partners. Let us see how it works. Capital accounts of partners, combined capital accounts of partners. Combined capital accounts of partners. Yes. That's all. Write debit credit particulars, the name of the partners with rupees, Pankaj rupees, Naresh rupees, and the third partner Saurabh rupees. Write in full. I will write in short forms. Yes. Now, let us start. Capital account starts with the capital balance, right? So, by balance brought down, capital account shows credit balance because capital balance always appears on the liability side of the balance. I told you all liabilities will have credit balances. So, by balance brought down, how much? 46, 30 and 20. 46,000, 30,000 and 20,000. 20,000. Then realization account. By realization account, refer realization account, there is a profit, right here profit, right? So write the profit. How much? 9,000, 6,000 and 3,000. 9,000, 6,000 and 3,000. Right here, old ratio 3:2:1. Correct. 3:2:1. Old ratio. Then refer your old balance sheet. If you refer old balance sheet, there is general reserve on the liability side. Transfer it to the opposite side of capital account. That is right hand side, isn't it? So by general reserve, by general reserve account, 3:2:1 old ratio, transfer it to all partners capital account. How much? It will be 6, 4 and 2. Total amount of general reserve is 12,000. So 6, 4 and 2. Yes. Then let us move on to the next part. Goodwill is to be created in the books of the firm. We have to, goodwill of the firm is valued at 42,000. So give credit to all partners. Goodwill account debtor to all partners capital account in their old profit sharing ratio. Then we have to write off the goodwill by debiting partners capital account and crediting goodwill account, that is continuing partners capital account added to goodwill account in their new profit sharing ratio, remember this. So by goodwill account created 3:2:1. Yes. How much? 21, 14 and 7. 14 and 7. Yes. This is goodwill created. Then goodwill written off, right? So that is to goodwill account, written off new ratio, isn't it? Whether new ratio is given, yes it is, 5:1, NR 5:1. So it will be how much? 35 and 7. 35 and 7,000. Yes. Then what else? No other entries? Now a clear instruction is given. Rupees 26,000 from Naresh's capital account be transferred to his loan account. So transfer 26,000 from Naresh's capital account to his loan account. 26,000 to Naresh's loan account. Right here transferred. Remember, this is not balancing figure. They told us to transfer only this much. Then whatever the rest should be paid through bank. Whether you borrow bank overdraft or whether you pay out of cash at bank makes no difference for you in capital account. You have to give only one entry to bank account. Partners capital account letter to bank account. You are paying through bank, whether there is bank balance or you are borrowing overdraft will not reflect in your capital account, it will be reflected in the balance sheet. We will come to that part later. Clear? So here you have to give simply to bank account. Whether balance is there or not, don't worry about that. While preparing balance sheet, let us show the calculations over there. How much bank balance was there, how much bank balance was utilized, and how much bank overdraft is borrowed. Clear? Yes. Now close the account, find out the difference and bring down the balance of continuing partners and make payment to the retiring partner. Now total will be how much? 32 in last partner Saurabh's capital account, 32,000. Here 54,000, that is retiring partner Naresh, and Pankaj 82,000. This is the total. Write the same total on the other side, 82,000, then 54,000, then 32,000. Now balance other partners capital accounts. To balance carried down. Balance carried down, that is balancing figure. Balancing figure only in other partners capital account, not the retiring partner. Remember this. How much? 47 and 25. 47,000 and 25,000. So bring down that balance here. By balance brought down. By balance brought down. This is the balance of continuing partners capital account. So 47,000, then 25,000. 25,000. This is done, but this part is pending now. retiring partner's capital account is pending. Let us conclude that. So, what is the difference? That should be paid through bank. What we did is, we have transferred 26,000 to his loan account that we will pay later, and for the time being, we will show that as a liability on the liability side of the balance sheet. Then difference amount we will pay through bank, either from bank balance or by borrowing bank overdraft also we have to make payment to Naresh. Clear? So find out the difference right there as to bank account. Naresh's capital account debtor to bank account. Final payment balancing figure. Balancing figure, payment made. Balancing figure, payment made. How much it is? Find out the difference. Find out the difference. That is 28,000. 28,000. Correct? 28,000. Yes. Don't bring down this again, because it is bank balance. It's an amount paid to the retiring partner, and this is also transferred to his loan account. His capital account is closed, so it will not come here again. Remember, only continuing partner's capital will come. Let us move on to the last part now, balance sheet. Balance sheet of who are the partners? Pankaj and Suresh. Is that correct? Saurabh, sorry. Pankaj and Saurabh. Saurabh as on, write the date. The date of the balance sheet. Pankaj retired. Naresh retired from the firm. Date of balance sheet was 31st March 2018. So 1st April 1st, 2018. Right here, after, within bracket, after Naresh's retirement. I wrote N, you just write Naresh. Naresh's retirement. Yes. Now, let us move on to the assets and liabilities. Write all headings, don't write debit credit. It is a statement of assets and liabilities. It is a balance sheet. It is not an account at all. So liabilities amount in rupees, assets amount in rupees. Let us start with the bank. Bank, that is cash at bank. How much balance was there? 7,600, right? 7,600 minus paid to Naresh. Paid to Naresh. This is what we are doing here. Out of the total amount of rupees 28,000 paid to Naresh, total bank balance was utilized first. That is, we paid 7,600 balance which we had in our bank account. That was utilized fully first. Then remaining amount, shortage amount is paid through bank overdraft. So what you have to do is immediately create a liability here, otherwise you will forget later. Remember. So total amount paid to Naresh is 28,000 minus how you have paid 7,600 you have utilized from bank balance. How much shortage is there? The shortage amount is 20,400, right? So create that as bank overdraft. Bank overdraft. What do you mean by bank overdraft? It is a temporary loan, isn't it? Temporary loan given to the business by the banker. 20,400. How we have arrived at? I will write here 28,000 amount paid to Naresh minus the amount we had already in our bank account. The remaining is raised as a loan. That is what they told. That is what they told. So 20,400 is the bank overdraft created by us. So by borrowing a loan of rupees 20,400 from the bank and utilizing our bank balance of 7,600 entirely, total together 28,000, we made payment to Naresh. Clear now? Yes. Now, let us move on to next part. So, if you forget to pass this entry, then you will struggle at the end. So, whenever you use this, immediately pass this entry, write this item on the liability side so that there is no confusion later. Clear? So, now bank balance is nil. 7,600 minus 7,600. Then, what is the next asset? Debtors. Debtors. How much? 6,000 minus PDD, provision for doubtful debts. How much? 300, right? 300. They told in the problem that is at 5% on debtors at the rate of 5%. So 5,700. Then comes stock, isn't it? There is a change. Refer revaluation account. What happened to stock? Stock is decreased by 10%, right? So inner column 9,000 minus decrease at 10%. So 900, 8,100 is the final value of stock. Then furniture. Is there any change? Yes, it is. Yes, there is. Refer their credit side. There is appreciation, doesn't it? Final value is given. Write it in outer column first. How much they told? 45,000. Increase it to 45,000. Yes, it is. 45,000. Write this first. Write the value, old value in inner column, 41,000. Find out the difference. Difference is 4,000. This is increased, isn't it? So add appreciation. So very simple. Otherwise, you will get confused. Remember. So don't write 4,000 in outer column. Students have the habit of writing 41,000 plus 45,000 and they will write it is 86,000. 86,000 they will write. It's wrong. So write the final value in outer column first. So there will not be any confusion for the student. Remember. Then premises, it's the last asset. There is a change. Premises, how much? 80,000. There is appreciation. Add appreciation at the rate of 20%, right? 16,000. 96,000. 96,000. Correct? Yes. Now, asset side is done. Goodwill will not come because goodwill is already written off, isn't it? When the goodwill is written off, no question of goodwill balance. Remember. Very simple. Just move on to liability side. One liability is already written. Then sundry creditors. Sundry creditors. How much? 15,000. 15,000. Then bills payable. Bills payable. How much? 12,000. Then outstanding salary. Outstanding salary. Salary. How much? 2,200, right? Outstanding salary, it is 2,200, no change as it is. Then provision for legal damages. Provision for legal damages. See, there is a change. It is increased. Earlier value was 6,000. Additional provision, add additional provision, right? Additional provision, how much? 1,200 they told, right? So total legal damages provision is 7,200. 7,200, yes. Then refer your capital account. Naresh's loan account is there, 26,000. We didn't pay this amount to him. We simply transferred that amount to loan account. So Naresh's loan account is a liability. Naresh's loan account 26,000, and that's all. No other liabilities other than the capital. So write capitals. Under that, first partner is Pankaj, isn't it? Then the other one is Saurabh. Yes, Saurabh. How much? 47 and 25. Write the capital balance, final balances in their capital accounts. 47 and 25. And 25. Is it 72? Yes, it is 72,000. Write in outer column. Check the total. Your balance sheet must agree. Yes, balance sheet agrees. 154,800. 1,54,800. 1,54,800. Yes, this is what the balance sheet is. So you have understood how to solve this problem. Remember, whatever amount is, this is partial payment. Settlement of partners' capital, retiring partners' capital account. This is one of the modes. Earlier, we used to transfer it to loan account. No instructions in the problem. Here they gave instruction, make part payment and make, that is transfer the balance amount, this much amount to loan account. That is what we did. 26,000 we are transferred to loan account and it is shown as a liability there, and the balance amount is paid by using bank overdraft, that's bank balance, and shortage amount is borrowed as bank overdraft, remember. So by using whatever amount is there in the bank account plus shortage amount is borrowed as bank overdraft, and this much amount is transferred to loan account. So bit complicated one, but still if you understand it, it's very easy to solve. So make sure of these things in the while analyzing the problem. Clear? Hope I think it's very clear to you. Yes, with this your problems without capital adjustments is over. I'll take up problems with capital adjustments in the next class. Take assignment. Solve the same problem, that is this one. Pankaj, Naresh and Saurabh. Same problem and submit it on time. This is your assignment. Clear? Thank you for watching this video. Thank you.